Hey everyone, and welcome back to Markets Unpacked. I'm Sophie, and today we're diving into one of the most fascinating and fast-moving corners of finance, the world of commodity trading. Oil, gold, coffee, you name it. These are markets that literally shape our everyday lives. And joining me is Daniel, a commodities analyst who's been studying market behavior and the tools traders use to navigate all this volatility. Daniel, great to have you here.
Thanks, Sophie. Always a pleasure to talk about a topic that affects not just investors, but honestly, everyone who buys groceries, fills up their car, or even enjoys a morning cup of coffee.
Exactly. I think most people underestimate how connected commodities are to daily life. And yet, the market can seem so mysterious. Prices swing dramatically, and suddenly gold is soaring or oil is plunging, and we're all left wondering why.
Right. And those swings aren't random. The key difference between being caught off guard and being prepared is understanding the tools that help you read and react to the market. With the right tools, volatility becomes an opportunity rather than a threat.
Let's start with the big picture. Why is trading commodities such a big deal right now?
Well, markets have become more accessible than ever. Digital platforms now let anyone, from a student to a professional investor, trade commodities from anywhere. In 2023, the volume of commodity derivative contracts hit over 10 billion, and that's huge.
Wow, that really shows how democratized it's become. But it also means more people are exposed to volatility, those sudden jumps and drops in price.
Exactly. Take crude oil, for example. It had an annual variation of over 30% in 2022. That kind of movement can be terrifying or thrilling, depending on how well equipped you are.
So, for anyone listening who's curious but maybe a little intimidated, what's the first thing they should know?
That it's not about predicting the future. It's about preparing for it. And that's where the right trading tools come in.
Let's talk about those platforms then. These are like the cockpits traders use, right?
Exactly. Trading platforms are the control centers where everything happens: buying, selling, analyzing, automating. Without them, it's like trying to navigate a ship without a steering wheel.
So, what are the most important ones right now?
Well, MetaTrader 4 and 5 are classics. They dominate retail trading worldwide. Around 60% of users rely on one of them. MT5 in particular allows more
Madre
complex
mía, lo hemos
strategies and
perdido
algorithmic
todo.
trading. It's like a Swiss Army knife: versatile, powerful, customizable.
I've heard of TradingView too. That seems to be everywhere on social media.
Yes, and for good reason. It's not just a platform, it's a community. Over 50 million users share charts, discuss trends, and collaborate. You can analyze the market right in your browser, no installation needed.
So, for beginners, what's a smart combo?
Use TradingView to analyze and MetaTrader 5 to execute trades. It's like having a telescope and a steering wheel. Analysis plus action.
I love that analogy. Telescope and steering wheel. See the big picture, then steer with precision.
Exactly.
All right, now let's talk about technical analysis. Those charts full of lines and colors that seem to hypnotize traders. What's really going on there?
Think of it like checking a patient's vitals. Prices are alive. They breathe, rise, fall, accelerate, or slow down. Technical analysis is how we read those vital signs.
So, what are the key vital signs for commodities?
One of the basics is the moving average. It smooths out prices and helps you see if an asset, say oil, is trending up or down. Then you've got the RSI, or Relative Strength Index. It tells you when something's been overbought or oversold.
Ah, like when a commodity's been pushed too far one way and might bounce back.
Exactly. And then you've got the MACD, the Moving Average Convergence Divergence Indicator. It signals changes in momentum, which is vital in fast-moving markets like natural gas.
And do professionals rely solely on these tools?
They use
That
them,
is
but
what
they
I am
also
talking
test
about.
them. That's
We
called
did it!
backtesting, running a strategy through past data to see how it would have performed. Studies have shown that traders who backtest properly can reduce losses by up to 20%.
That's a big difference. It sounds like science meets intuition.
That's exactly what it is.
Now, you've talked about the heartbeat of the market, the charts. But there's also the world outside the charts, right?
Yes, and that's where fundamental analysis comes in. It looks at the real-world drivers: weather, geopolitics, inventories, central bank policies.
So things like a drought in Brazil affecting coffee prices or an OPEC meeting shaking up oil.
Exactly.
Sell it
Those
now.
are
Get
classic
out while you
examples.
still can.
The U.S.
We're dropping
Department of
fast, and I
Agriculture
need
releases the
50,000 shares at
WASD
par.
report. It's basically the Bible for agricultural traders. If it says soybean production is up 3%, the whole market reacts.
And in energy markets, the U.S. Energy Information Administration reports every week, right?
Right again. If they announce higher exports or lower inventories, crude prices move almost instantly.
So if technical analysis helps you steer, fundamental analysis tells you whether a storm's coming.
Perfect metaphor. One tells you how to navigate, the other tells you what's ahead.
Let's shift gears a bit. Once someone's ready to start trading, they need a broker. How important is that choice?
It's everything. Your broker is literally your bridge to the market. A bad one can lead to scams, bad pricing, or even loss of funds.
That sounds serious. What should people look for?
First, regulation. In the US, the CFTC is the main regulator. In Spain, it's the CNMV. In the UK, it's the FCA. Always check if your broker is registered.
So not just about low fees or fancy platforms.
Exactly. Platforms like Interactive Brokers are great because they're heavily regulated and give access to over 100 markets. And for beginners, eToro or Plus 500 are user-friendly. But again, regulation is non-negotiable.
Right. If it sounds too good to be true, it probably is.
That's the golden rule.
Okay, let's get to the heart of strategy. What really separates a strategic trader from a lucky one?
One word, risk management. It's what keeps professionals in the game. Tools like stop-loss orders, take profit levels, and trailing stops protect your capital automatically.
So automation can actually make you more disciplined?
Absolutely. In fact, according to McKinsey, algorithms already account for more than 70% of institutional trading volume. Automation doesn't eliminate risk, it structures it.
That's fascinating. It's like building guardrails on a mountain road. You still have to drive, but the guardrails keep you safe.
Exactly. And some even use hedging, especially in agriculture or energy, to protect against price drops. It's like taking out insurance on your crops or fuel.
So the message is don't rely on hunches, rely on systems.
Yes, hunches fade, systems endure.
I love that. And speaking of endurance, let's talk about the emotional side, because markets test your nerves, right?
They do. Trading commodities can be like riding a roller coaster, thrilling and terrifying. The best traders aren't just skilled, they're emotionally disciplined.
So mindset is a tool too.
Absolutely. It's the most underrated one. You can have all the indicators in the world, but if fear or greed take over, your plan collapses. The goal is to stay rational, to trade the plan, not the emotion.
That's such an important reminder, especially in a market where prices can swing wildly in hours.
Yes, and that's why preparation matters. If you plan before you act, you don't panic when things move fast.
All right, for our listeners who are ready to dip their toes in, what's one practical step they can take today?
Start by studying before investing. Use demo accounts on platforms like MetaTrader or TradingView to practice without risking money.
That's a good one. And maybe start reading the news differently, looking at how events connect to commodities.
Exactly. For instance, when you see a headline about droughts, think coffee or wheat. When OPEC meets, think oil. Make those mental connections, and suddenly the news makes financial sense.
So curiosity really is the gateway.
It is. You don't need to be an economist to understand commodities. Just curious enough to learn how the world works through prices.
Well, Daniel, this has been eye-opening. From platforms and charts to emotions and strategy, it's clear that mastering commodities isn't about luck. It's about learning the language of the market.
Exactly. And once you speak that language, you don't just trade better, you understand the world better.
Beautifully said. Daniel, thank you so much for joining us today.
Thank you, Sophie. Always a pleasure.
And to everyone listening, remember, whether it's oil, gold, or coffee, every price tells a story. The more fluent you become in that story, the smarter your financial decisions will be. Thanks for tuning in to Markets Unpacked. Until next time, stay curious and trade wisely.